Good morning. This is Larry Edelson for my Uncommon Wisdom weekly market video update for Thursday, March 17th. First, I want to wish the citizens of Japan, my friends and colleagues there, a speedy recovery. This is a terrible situation, a very, very unfortunate situation, and natural disaster, and I do wish everyone there the best and a speedy recovery. I have no doubt that the Japanese as a nation, as a people, will put everything they have into this recovery, and I'm sure that they will in the end thrive as a result. Now, I want to turn right to the markets. Interestingly, in last week's video, I was very foreboding last Thursday in telling you that the precious metals looked like they were going to roll over to the downside, and I made it abundantly clear to everyone that the stock market as well was looking very top heavy. Lo and behold, of course, we have a unprecedented natural disaster that struck on Friday, and it has become the trigger for many of the market moves that I've been forecasting. So let's go right to the gold chart first. I'm calling this up here for you. You can see clearly on this chart that gold has broken down. Notice how it's broken support level here, and now just a few days after the disaster in Japan, gold is trying to test this area which was previously support. It has now become resistance. Also, note the wide open space here. There is not much support in the gold market underneath this area. So if gold does not recover this support area here, and indeed it has become resistance, we could see quite a sharp sell-off in gold, which is precisely what I've been forecasting for you in my previous videos and on a cyclical and technical basis. Gold can work its way down, all the way down to 1225 over the next few weeks, and don't be surprised if that happens. Again, I'll repeat my warnings here. This is only a short-term move, a much needed pause for gold. It is actually a decline here and now. Will be much more bullish longer term for gold. The last thing in the world that we wanted to see was a runaway market to the upside here and now. As tempting as that might be, that would have been disastrous for the precious metals. So I'm pretty much overjoyed that gold is breaking down here and taking a much needed pause and correction. And I hope that it continues that way, because for the longer term it is more bullish than bearish. And please follow my recommendations there in my various publications to hedge up or take advantage of this decline in gold. Now let's move on also to silver. Silver has of course also taken a quite substantial fall since the disaster hit Japan, down over almost $3 from its high. Silver looks a little bit better on the charts, but it is breaking down. The next move in silver should be below this red support line here, which is a cyclical support line. And once that happens, we could see silver go into a virtual free fall, down initially to 25, probably then bounce up to 27, and then plummet down to 23, maybe even 21. Again, like gold, a decline, pullback, correction in silver right now is much more bullish longer term. So if you're a bull in silver longer term, you should be looking for a good healthy correction now, because that is much more favorable to the long-term bullish case in silver. Now I want to move on to the dollar. Interestingly, the dollar, basis the dollar index, did rally quite sharply on the news of the earthquake, but in the day after, a couple of days after trading action, after the earthquake struck, we saw the dollar actually slip back below this support line here, which is a very bearish indication overall for the dollar index. Now, the dollar is losing value right now against the yen and the Swiss franc, and it's been gaining a value against the Australian, the Canadian, the commodity currencies. So it's always a mixed bag when you look at the dollar index. The dollar index is very deceiving. It cannot tell you what the dollar is doing against any particular currency at any moment in time. However, as a barometer for the dollar's overall health, it is a good indication. And this action here in the dollar index is very bearish and entirely consistent with my long-term view that the dollar, as the world's reserve currency, is losing purchasing power, is going to continue to lose purchasing power over the next few years, and eventually the world will be faced with a new monetary system. But having said that, the dollar is nothing but a short sale, in my opinion, on any rally. Of course, keeping in mind that there's always going to be idiosyncratic moves against particular individual currencies. Now, next up, the Dow. Interestingly, last week, and actually for the last few weeks, I have been reporting to you that first, I targeted the high coming in at around 12.4, 12.5. We got up to 12.4. Then we started to fade back down. It looked like we would hold support in this area here, this sideways action, and maybe take another stab at 12.8, maybe 13,000. However, last week I gave you an important warning that it was looking very top heavy towards me, and that I was looking for a breakdown sooner rather than later. Of course, we all know what happened next. We have seen all markets get pummeled as a result of the disaster in Japan. And for the U.S. markets in particular, this represents the trigger for the move, the cyclical pullback and correction that I've been looking for in the Dow. We could see a rally back up to as much as 12.2 on some short covering and perhaps some good news coming out of Japan and perhaps a few other bright spots that might trigger a little bit of a bounce in here. But overall, I am looking lower, first to 11,000 and then down to the low 10,000 level, and ultimately by June of this year down to about 9,600. From that point, as long as major support holds at around 9,600 by June or July latest, we will be looking at a renewed next leg up in the bull market that will take the Dow Industrials to new record highs in late 2011, 2012. So these are obviously critical times. We can all say that these are outside influences, the Middle East situation, the earthquake and tsunami in Japan, that nobody could predict, and indeed they're very hard to predict. But if you listen carefully to the markets and read the charts carefully and understand the trends and the forces at work in the markets, more often than not, the markets contain some kind of subtle clues as to something that's going to break in the future. And usually, indeed, what we find is that a fundamental event or a fundamental piece of news or a fundamental economic stat then becomes the trigger for the tipping point for those trends to change. And indeed, that's precisely what we've seen in the last few days. With that, until next week, God bless. And again, to the nation and people of Japan, I wish you a very speedy recovery. This is Larry.